Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about THREDUP INC quarterly report. THREDUP Inc. offers a range of businesses and services through its online resale platform. The company provides a marketplace for buying second-hand apparel, a platform for selling used shoes and accessories, online shopping experience for consumers to purchase pre-owned clothing items. THREDUP Inc.'s stock price skyrockets. A year of record-breaking growth in the past year. THREDUP Inc.'s stock price has skyrocketed by a staggering 839.07%, with increases reported as high as 1,190%. Several key news events have contributed to this substantial growth. The company's strong Q3 2025 financial results, which included record-breaking revenue of $82.2 million and improved adjusted EBITDA, marked a significant milestone. THREDUP also presented a positive outlook at the Wells Fargo 8th Annual Consumer Conference, highlighting its strategic shift to focus on the U.S. market and investments in artificial intelligence. Positive analyst ratings and market sentiment have further fueled the growth narrative for THREDUP. Several investment analysts have issued buy or outperform recommendations, setting price targets that suggest further upside potential. The expanding second-hand apparel market, projected to reach $74 billion by 2029, provides a strong underlying growth narrative for THREDUP. As a result of these factors, THREDUP's stock price has experienced significant gains, making it one of the top performers in the past year. The primary drivers of revenue growth or decline can be summarized into several key points. Revenue growth is primarily driven by a significant increase in active buyers, with a 25.6% year-over-year rise. Additionally, orders have increased by 37.2% year-over-year, and the transition to a consignment model has also contributed to revenue growth. Breakage revenue from gift cards and site credits has added $1.3 million in 3 months and $2.2 million in 9 months. Furthermore, revenue recognized from the redemption of seller credits has increased by $8.2 million in 3 months and $21.7 million in 9 months. On the other hand, revenue decline is primarily driven by the divestiture of European business and Bulgarian subsidiary, which has resulted in decreased revenue. Additionally, loyalty reward redemptions and expirations have led to a decrease in revenue, with a loss of $2.8 million in 3 months and $10.3 million in 9 months. Net income experienced a significant decrease of 59%, dropping from -$10.4 million to -$4.2 million due to inflationary pressures. In contrast, profit margins showed mixed results. While gross profit margin remained relatively stable at 79.3% and 79.4%, non-GAAP adjusted EBITDA margin saw a substantial increase from 0.5% to 4.6%. This disparity suggests that the company's ability to maintain profitability improved despite declining net income, likely due to cost-cutting measures or other operational adjustments. The company is indeed generating positive operating cash flow, as evidenced by the consistent figures reported across different pages of the financial summary. The net cash provided by continuing operating activities for the year 2025 and the 9 months ended September 30, 2025, all show a significant amount of $12 million or more. This indicates that the company is successfully managing its finances to produce a positive operating cash flow, which is a crucial indicator of financial health. The company's debt level and interest expenses have undergone significant changes in recent years. In terms of debt level, there is a mixed picture. On one hand, total liabilities decreased by 12% from $29,856 million to $26,279 million between 2 unspecified dates. However, the non-current portion of long-term debt increased to $15,247 as of September 30, 2025, with no comparable figure provided for December 31, 2024. On the other hand, total debt actually increased from $21,809 at December 31, 2024 to $22,512 at September 30, 2025. This suggests that while liabilities decreased, the company's overall debt level has not significantly changed. Regarding interest expenses, there is a clear trend of decrease. Interest expense dropped by 25% from $2 million to $1.5 million between 2 unspecified dates. Additionally, interest expense decreased by 24.2% and 24.1% for the 3 and 9 months ended September 30, 2025, respectively. Overall, while there are some discrepancies in the data, it appears that the company's debt level has not changed significantly, but its interest expenses have decreased substantially. Management's outlook for the company is optimistic, with a focus on achieving and maintaining profitability while effectively managing growth and expanding operations. They anticipate continued network effects as they scale their platform, which will drive future success. The company prioritizes investments in key areas such as distribution networks, product development, marketing, and personnel to support growth. Management also believes that the business model creates a positive impact for all stakeholders, particularly in the emerging resale economy. However, they acknowledge that inflation is negatively impacting the business, which may slow revenue and order growth. Despite this challenge, the outlook remains positive with an expected increase in operating cash inflows. Concerns about inventory buildup and supply chain disruption. Our financial summary highlights two key concerns regarding our company's inventory management. Firstly, an inventory buildup has been observed due to increased inbound shipping costs and distribution center-related labor expenses. This is largely driven by higher supply volumes, which have put pressure on our logistics operations. Furthermore, a decrease in sales of owned inventory worth $3.6 million suggests that we may be holding onto excess stock, potentially leading to waste or obsolescence. These issues raise concerns about the efficiency and resilience of our supply chain, highlighting the need for careful management and optimization strategies to mitigate these risks. That concludes the financial summary for THREDUP INC. Feel free to comment below, and I will be happy to answer them when possible.